right, everyone, we are getting ready to start. I am excited here today. This is a great day. This is the inaugural coaching program for Deloach Enterprises. I know by the end of these 4 weeks will be a opportunity for you to grow your business, to be able to help your clients, your customers increase their portfolio and actually help you generate wealth. So I'm excited about this. Let's talk about recovery, expansion, hypersupply, recession. If you understand recovery, we experienced it here in the US after we had the recession, the housing market crunch. But typically, this comes after the market downturn, property demand is low, vacancies are high, and construction activity is minimal. This is the opportunity still because smart investors just look for undervalued property. And as a professional, you can help them to do this by seeing what's out there in the market. Now, when it comes to the expansion, that's typically like you're seeing in here in countries where you're seeing cranes go up, cities where there's a lot of development going on, there's job growth, the demand for space, rent and occupancy is climbing, and there's new construction. So I would say I'm here in Orlando, Florida, and we're in an expansion. Growth is everywhere. It's just not tourism, but it's same as overseas in Dubai, where, they are growing at a phenomenal rate. The other one is hypersupply. This is where the inventory grows faster than demand do. This is where you're going to come into overbuilding. And that happens after a great expansion period. Now you've got this overbuilt. And what happened is vacancies start to rise. So now the return on investment is going to hurt that investor, because they're going to have high vacancies. Rent growth slows and the market appears saturated. So you just got to be cautious about this and be able to time it right for your investors, when to get out of the market, depending on the area that they're in. And then again, the recession, as I mentioned earlier, this is definitely where you have a crisis. Rents are going down, values drop, home prices drop. We saw that here from the 06 to 08 period. And then investment slows significantly. A lot of investors sit on the sidelines. But the key here is that a smart investor can focus on their assets. They can also go out and look at distressed properties and buy those up. I know one builder who did that, made some phenomenal investments. A major construction company here, developer in the US, D.R. Horton. After the housing crisis, this developer really, really waited, timed the market, and then started buying up land in great places such as Florida and did developments. And now they bought these distressed lands and they made, a lot of money when the market came back. So there's always opportunities regardless of what market cycle the real estate is in. And remember, every 10 years, the market cycle goes through the same stages. If you go back through history, you'll see these 4 stages, and it's just inevitable. But again, real estate is one of the best investments over stocks, to me, over bonds and other investment opportunities, because it is always going to be stable at some point. There's always going to be opportunity, and people are always looking for a place to live, work, and play. So again, my recommendation, when we're comparing the US, the UAE, and Europe, investors can capitalize on contrasting market cycles. As long as you understand economic indicators like the impact of the interest rates, what are the migration trends, And also, it is smart to stay up on policy reforms so that you can have strategic positioning when it comes to undervalued or as well as high growth areas.